Hey friends, welcome back to another episode of Making Sense of Your Market. I got 4 minutes today. It'll be the most impactful 4 minutes of your week. I promise you. So it's Friday, September 19th, 2025. Big week. So the Fed met. The Fed lowered the Fed rate by 0.25 percentage points or 25 basis points. But guess what? Mortgage rates didn't drop. It's kind of weird. I made a video earlier this week and a lot of people have asked me, they're confused by this. They're confused what the role of the Fed is relative to mortgage rates. Just remember this. You have the Fed over here. They control money in and out of America. What they do over here indirectly impacts mortgage rates, not directly. They don't move with each other, okay? So just remember that. You got a guy like me to help you make sense of what this means to you. And that's why I wanted to make this short video. So I talk to a lot of real estate agents every single week. I work with a lot of their buyers relative to getting them financing. And I deal with a lot of their pains, the questions and the issues that they're dealing with. And a lot of real estate agents are saying right now, Dan, that my buyers are just waiting for the market to improve. They want to see homes appreciate. They want to see mortgage rates drop before they make a move. And they don't know what to say. And so what I try to encourage them to talk about, and I want to encourage you to listen to this and to think about this, is cycles and patterns. Think of it this way. The last 3 years, the Fed increased the Fed rate. If you go back to the 1960s to current, every time the Fed raised the Fed rate and then they stopped and they started to lower the Fed rate, what did it do to mortgage rates? What did it do to real estate, home values? Case-Shiller. I will tell you what it did. When mortgage rates dropped, housing boomed. When mortgage rates dropped, housing boomed, meaning there was just more activity. All it takes in a limited inventory environment like we have and like we've had for the last 15 years here in Washington State is more than one buyer. You get more than one buyer on a property and now you got into a higher bidding situation. So they got to outperform each other to win the offer. We're going to see that as we start coming into lower rates. So a way to understand patterns and cycles and win with that knowledge is to, if the right home is for sale, leading up to these rate drops, before home values go way up, if you could lock that in now or before that, you win in the end. Now, if you don't, you just end up paying more for that particular home. I'd like to owe less on that particular home than have to pay more for it. So that's an opportunity to right now to win with the knowledge of these patterns and cycles. If you have questions around how economic, mortgage, and real estate patterns and cycles impact your current reality, I'd love to chat with you about that. 25 years investing in real estate, 15 plus years investing in the stock market, 18 plus years in the mortgage industry. I've got a lot of wisdom and market experience that I know you can get a lot of value from. So I'd love to be that resource, or I'd love for you to introduce me to someone that you know that needs a solid local resource like me. Now, the second thing that I wanted to talk with you about today is the most important thing I get to talk with people about, and that's the law of money. There's two parts to the law of money. Number one, save 20% of your taxable income every single month, invest it, and never touch it for 20 plus years, and you will be wealthy. That's part one. Now, part two, meaning what does this actually mean, is a real simple pie chart that I was taught by my mentor. I've followed this to a T now for a couple of decades, and I promise you, it works. It works for me, and I've seen it work for hundreds of other people. Number one, you need to own primary real estate. Own primary real estate. If you want to put that quadrant number one on steroids, buy real estate and turn one into an investment home and buy another primary piece of real estate that you live in. Okay, that's number one. Number two, you need to have a rainy day fund of about $20,000 to $25,000. Life will hit you. You will encounter a rainy season. And if you have that liquid account, it's easier to navigate through that financially. Number three, max out your 401k. If you are an employee and you work for an employer, see if that employer will match your 401k contributions. That's free money if they will. Number two, max that sucker out. But if you got two people in your household, two of you guys, max that out for 20 plus years and you will be financially well off. I think it's like $23,000 plus a year that you can do, that you can invest in your 401k. And then number four, anything that's left over, go back to the law. Number one, invest it in the stock market. This is not financial advice. I can introduce you to great financial planners that can help walk you through this safely and to get the greatest return. But that is the law of money. I teach this to every single client, anyone who will listen. And now I want to ask you a quick question, a favor. I need your help. If you know of anyone right now that needs strategic and professional mortgage advice, I would love an introduction. I've got an incredible staff. We're coming out of 3 years of a very, very tough market, and we are ready to go to work with more people and for you. So we're having a lot of conversations right now, a lot of people on the sidelines waiting for a little bit lower interest rate to refinance them, but we've got a lot of people that with the right advice can make a great move in real estate right now. So I'd love an introduction to someone that you know that needs to either rework their mortgage or buy real estate in 2025. I would greatly appreciate that. And one last thing, if you have any questions on any of this stuff, I want you to reach out to me. And I'd love to have a conversation with you to see how we can strategically prepare to make a really great move in the markets with you. All right? Hey, I look forward to seeing you next Friday on another episode of Making Sense of Your Markets. In the meantime, have a great weekend, okay? Bye for now.